his practices and policies were discriminatory against people with disabilities. Now, she was in the process of getting her real estate license, so not only did she want to do the right thing, but also she was risking her real estate license if she was caught, participating in these discriminatory practices. Now, she contacted us and let us know what was going on. Particularly, she said that the owner preferred not having people using wheelchairs living in the building. Now, we did an investigation. We actually found these policies to be true, and what we did was we facilitated the complaint process. We filed a formal complaint against the apartment owner due to the fact that he had discriminatory practices against people with disabilities. And we actually we settled the case not too long ago, just a few months ago. But that's one example of something that we've seen recently in the area. Now, the Fair Housing Act, it makes certain accommodations for people with disabilities, especially in this area. A lot of the housing stock is very old, and it's not accessible for people, for example, who use a wheelchair. So therefore, it talks about two different things. The first thing I want to talk about is reasonable accommodations under the law. Now, defined, this means a change in a rule or a policy that is necessary for a person with a disability to use and enjoy their property as everyone else would. So for example, if a person who has trouble walking, let's say, needs a reserved parking spot that's close to the entrance of their home, that's something that generally, if there's a first come, first served parking policy, that would be a reasonable request to a housing provider to say, please can you reserve me a spot? Another example of this is if there's generally a no pets policy in a complex, and someone with a visual impairment needs a service animal or a guide dog. That's something that generally would be a reasonable request, as they need that dog for getting around on a day-to-day basis. So these types of things are reasonable under the law. Now, when is an accommodation unreasonable? Well, generally under the law it says that it would be unreasonable if it poses an undue financial or administrative hardship on the housing provider. Now, generally these accommodations they don't cost a lot of money, basically. It's more like an exception to the rule, as opposed to a housing provider having to pay for certain things. Now, so generally, like the two examples I gave you, those would be reasonable, but if it was something that was unreasonable, then there may be an argument that the housing provider does not need to accommodate. Now, the second thing I want to talk about are reasonable modifications. Now, reasonable modifications are changes in the physical structure of the property that are necessary for a person with a disability to use and enjoy their property as everyone else. Now, examples of this would be like building a wheelchair ramp up to the entrance of the house when there's already not one there, or grab bars in the bathroom for a person with a disability to stabilize themselves properly. Now, the changes to a physical structure, that obviously costs money, and it can actually cost a lot of money. But under the law, it's the responsibility of the occupant of the property. The person who needs the modifications done would have to pay for it. It's not on the housing provider to pay for any of those things. They would just have to allow that the person to have these modifications done. Simple as that. Now I want to talk about issues that may affect families with children. Under the law, there are certain occupancy standards that HUD talks about. Generally, HUD says that 2 people per bedroom is a reasonable amount of people for a unit. Now, this may differ depending on the square footage of the room or zoning laws, but generally, and across the board, most municipalities create their zoning laws in accordance with international building codes. So there may be a few exceptions, but generally this is reasonable. And our policy is that it's up to the person occupying the unit. Let's say if they have a family, they can set up as they want. If they want 2 kids and sharing a room, that's fine, you know, but if that means, I don't know, if they're being denied that opportunity to set up as they want, that could have a disparate impact upon a family with children or more people in a household. Now, we also had a case that had to do with occupancy standards. I believe it was in Chester County, I'm not sure, but we were contacted by a family. It was a husband and wife and their young child. And they liked where they lived. They had every intention of renewing their lease for another term. And then the wife became pregnant. So what happened was the landlord said they would not renew their lease for the next term because they lived in a 2-bedroom apartment, and now that there's going to be 4 people, even though they're 2 young children, that was against their company policy. They said that 2 people per bedroom was too many for that unit. Now, they contacted us, this family. We did an investigation and did find that these policies were in fact true. They were restricting occupancy, and they're more restrictive than 2 people per bedroom. So therefore, you know, we helped facilitate a complaint, and the family actually opted to file a federal lawsuit based on the discriminatory practices of the housing provider. And it wound up, we wound up settling, and the family got a reasonable sum of money to reimburse them for the costs of moving, maybe longer commute to work, or just the injustice of what had happened to them. They had to move and they didn't want to. So that was just an example of a case that we've had recently. Now, in addition to what I've already mentioned, rules not allowing children on second-floor units or in certain sections of a complex, that may also be unlawful. Rules not allowing boys or girls to share a bedroom. Again, it's up to the family as to how they want to do their, you know, living situation, how they want to set themselves up. So if they want like brother and sister sharing a bedroom, that's perfectly fine for them if they want to do that. As long as it doesn't go above and beyond that 2 people per bedroom. If, you know, we don't want like 5 people crammed into like a 1-bedroom apartment, but if it's 2-bedroom and it's a family of 4, that's perfectly reasonable. And also rules involving the safety and well-being of the children. For example, every apartment I've ever lived in, when I've moved in, they've all been older buildings, and I've been given a pamphlet on lead paint. And we've had incidences where landlords would refuse to rent to a family with children based on the fact that they don't believe it's safe for the children to live there, so therefore they'll deny them altogether. And again, I mean, their intentions may be well and good, and I completely understand their, you know, line of reasoning. However, if that's the only affordable living option for that family, let's say they want to be in a certain school district, let's say, then they would be denied based on the fact that the housing provider doesn't think it's safe. And hopefully the parents would have, you know, enough sense to look out for their kids. But again, it's up to the occupants of, you know, the tenants or the buyers, how they want to, you know, they can make their own decisions. It's not up to the housing provider. Okay, at this point, I just want to open it up for questions. Does anyone have any questions so far? No? Okay, well, before I conclude, I just want to say, you know, we are here to help. We've been serving this community for the past 52 years, and you know, like the examples that I read to you in the beginning, housing discrimination is still a major problem, and a lot of times it's very hard to detect. Again, discrimination is subtle these days. We've had our incidences of blatant discrimination, but most of the time it's kind of, people get the feeling like they're being mistreated, but they can't really put their finger on it. So in that instance, if anyone encounters anything kind of funny, you know, please feel free to give us a call. I don't know if I have cards back there, but we do have brochures with our contact information on it. We have one brochure that's a red brochure. It's called Fair Housing, It's Your Right. It basically tells you what it's being held up back there. It basically tells you what your rights and responsibilities are under the law, just in a quick little booklet. And we also have a booklet on homeowners insurance that kind of goes through everything that you would need to know in accordance with the fair housing laws. So with that, I just want to say thank you for having me, and I'm always available for questions. Thank you.
Tim Dobson is going to come back up and talk a little more about the homeowners insurance. And then after that, we'll have the banker come up. So Timmy, go ahead.
Okay, hello everybody, I'm back. Hi. Yeah, for those who went outside, you've probably seen the mobile insurance office. We also have a mobile insurance office, so if you guys know of any community events, you guys can give us a call. We can come to that community event and talk about all different types of insurance. A little bit earlier, I believe I left off, we were talking about liability insurance. In the event that someone got injured on your property and they decided to sue you. Very important topic. Liability insurance comes automatically with your homeowner's insurance policy. The standard amount is $100,000, but you can get it increased to $300,000 or even $1 million. Usually your liability insurance should closely resemble the value of your property. Now, for example, when you become a homeowner, you're responsible for anyone who goes on your property. For example, the mailman has to go up and down your steps on a daily basis. If your steps are not shoveled, okay, or your sidewalk is not shoveled, the mailman slips, falls, hurts his ankle. They will file workers' compensation claim with the post office. The post office or the Department of Labor will then proceed to recapture that money that they pay that postal worker from your homeowner's insurance policy. The way they can tell where the postal worker got hurt is the last person they delivered the mail to, that address. Okay, because the mail will stop there. That is actually one of the most common claims when it comes to liability insurance. It's the postal worker that's hurt on your property. Homeowners insurance will also cover other types of liability claims, such as dog bites. If you have a dog, and your dog gets off the chain, jumps the fence, goes and bites someone, more than likely, you'll probably hear stuff like that on the news, that a pit bull bit someone. What you don't hear is a lawyer contacting that homeowner or that dog owner and processing a lawsuit against them. Okay? How many people would sue if they got bit by a dog? And yet, yeah, a lot, right? Especially if they have that real nice house, right? You guys are gonna get. Okay, so your liability insurance will cover you for those types of exposure. That's basically what liability insurance does for you. Now I'll talk briefly because I only have a few minutes. All insurance policies come with a deductible. The standard deductible is $500. Now today, most people are increasing their deductible to $1,000. What they're trying to do is get their premiums down. So the higher your deductible is, the lower your premium is going to be. And that gets back to the most important question. How much does this cost? Right? Homeowners insurance costs vary depending on where you get it from, what the company is looking for when they evaluate the risk. Many companies use credit scoring. They call it an insurance score. It's used for your homeowners, for your automobile coverages, pretty much for everything now. Everything now has been put in the combination of some type of score, some kind of evaluation underwriting score that insurance companies use as well as banks. So it's very important to make sure that your credit stays good, that you do not go out and buy a new car while in the process of doing settlement. If your car breaks down, we ask that if you want to buy a house, get a little used Squatter or something, right? Just make it happen, borrow a car, do whatever you got to do. Do not go finance a car because that bank will run your credit and your credit score will go down. Plus, it will throw your debt to income ratio off when they evaluate your mortgage. But also, anytime you do a financial transaction, it takes your score down on your credit. So do not go into Macy's or Best Buy and take advantage of that offer, 10% off today, if you know you're about to buy a house. Okay? Because we want to keep that credit score as high as possible. I'll give you an example. If you have a credit score somewhere around 650, and we use farmers insurance, and you're buying a property that's $200,000 to insure, today, we'll be able to get your homeowner's insurance policy for under $700 a year. Okay? And that'll cover $200,000 for the dwelling itself, $150,000 for your stuff on the inside, your contents, $100,000 in liability with a $500 deductible. That's if your credit score is in the 650 area, okay, and you have not had any home insurance claims. Now, this is a new product that the company has, where you can actually come and pick and choose the coverages you want. If you want water backup coverage, for example, that sewer line that goes under your property, okay, you just call us and say, hey, I want water backup coverage. Go ahead, another $40 to your homeowner's insurance premium. Okay, if you want to cover your diamond necklace, okay, you send us an appraisal, we calculate all of that into your homeowner's insurance policy. So we have a new product out called Distinct Choice. You pick the coverages that you want scheduled in your home insurance policy. We don't just work for farmers insurance, though. We're what they call independent agents. Very simple. If you have a buyer's agent for a real estate agent, they work for you. We're insurance agents. We work for you. I represent various companies, as you'll see on the back of the card. We have AIG, Prudential, whoever. And I couldn't get all the companies on the back of the card. I only got the companies that gave me permission. Okay. But we represent numerous companies, and our job is to make sure that you get the best value, the best policy for your insurance dollar. What we do a little differently from everyone else is that we actually educate our clients. We believe an educated client is going to stay with our agency longer. We're not looking for customers, we're looking for clients. Long-term relationships. Okay? That's what it's all about. So again, the realtor, Jane Crosco, she all right. I actually remember when Jane first got into the business, she married a good friend of mine, the guy's no interest. But Jamie's a very, very good agent, very diligent. What I like about her is she didn't change the way that she does business. You know, she sold a lot of houses now, but some houses when they start making a little money, they say how you work 9 to 5 and all that. The fact that she'll spend the time and meet with you in evenings and weekends. That's what you have to do to be successful. You have to continue to do it to continue being successful. I in turn work the same way. My office hours in my office basically say 10 a.m. to 5 p.m. Anybody that goes around 9th and Main Street, 7:30 at night on a typical day, we're still in there and we're still doing business. So office hours, like I said, only applies to inclement weather, like the snow on the ground. Other than that, we work. Okay. Someone had a question. I answered it very good. Very good. Yes, ma'am.
Yeah, is it right or is it good to add a car insurance to your house?
Good question. Okay. She said it's good to add car insurance to your home. If you get auto and home insurance with the same company, a lot of companies will give you a discount of 10% on each product. That's a car air freshener. Yes, the car freshener. Okay, yeah, they'll give you a discount on each product if you put your auto and home insurance policy together. So now if you own an automobile and you're buying a home, because I do financial advice, I look at the combined premium. For example, this year, just last week, I finally wrote my mother's home insurance policy. I was a Prudential agent for umpteen years. Prudential got bought out by Liberty Mutual. My mother kept Liberty Mutual. I'm no longer affiliated with Liberty Mutual. She stayed with Liberty Mutual for 5 years since I left. So my mother was no longer a client of mine. Right? Finally, this year, I said, Mom, we got to talk. I'm in this business, and you're not doing business. I'm your son. Okay? So I took what she was paying for her home insurance and what she was paying for her car insurance. I added it all together. Okay? And then I put the same home and the car insurance together with the same company. Got her better coverages. And the bottom line is she saved $450 per year. Okay? So she's happy now. They got the Thanksgiving with 2 pies.
So if I come with you and I say, well, I have a renter's insurance with Allstate and auto insurance with Allstate, and I say, I want to do my home insurance with you, and you can see what you can get me as far as a good rate for all three, or two.
Absolutely. That's what we do. I'm actually, again, I want to build relationships with clients, so we want to get all the business in the household one way or another. And So there, that answers the question. We know, we're very confident that we have the best rates for home insurance, and we're going to make sure you have the protection. That's more than anything else. I want to make sure that if something catastrophic happens to your home, that you got a place to stay. You can't replace people who are injured, unfortunately, so having emergency escape route, I cannot advise that enough. You hate to see people who are injured in a fire today. The smoke alarms, for example, you must have, okay? If I find out you don't have a smoke alarm in your house, we're going to decline your coverage. We say, hey, we don't want to insure, okay? So, have a smoke alarm, have a fire extinguisher in the kitchen. How many people had a grease fire before? Right? Okay. How many people cook? Okay, we had a grease fire and you won't be able to put it out, okay? And put it out with water doesn't always work, right? But the fire extinguisher, the little ABC fire extinguisher from Home Depot, usually about $19, something, around the area right there. Okay? Definitely recommend having it. And if anything else, have one upstairs too, because if you have to have a fire and you need to get downstairs, most people die of smoke inhalation because they're afraid it's dark. Remember, house on fire. You have it. You get up, you turn on the lights. House on fire. You have a light. Right?
Carbon dioxide ones.
Pardon me?
The carbon dioxide.
You know what? If you think you need it, I don't know a lot about
They
that.
become a law now.
But a lot of people are getting carbon dioxide detectors as well, especially in the basement with their lawn. So it's a good idea. But getting out of the house in a fire is very, very important. If you have a fire extinguisher upstairs and you see flame, okay, at least it'll give you the confidence to keep it moving, right? Shh, let's go. And that will save your life. It's that hesitation, oh, I don't know what I'm going to do. Run back into a corner, we lose lives. So number one, but if you get out the house safe and sound, all my clients, I'm assured, don't have to worry about the material things. Okay? You're going to get a nice place to stay. Some cases, the hotels are better than the house that you stay in. Okay? You get a nice place to stay, and we make sure we walk you through the process and get on your feet. 3 weeks ago, I had a fire victim, house up in Darden, and she didn't have a credit card. So I got the telephone call. I used my credit card. I booked a place at Residence Inn at the Marriott. I met with the adjuster later on. I said, look, make sure they don't charge my card. Get my money back. Okay? And that's what they did. They work with us. Okay? But I told them, order all the food you want, whatever you guys need, it's all paid for. And it is. Okay? But I didn't have to pay for it, but I make sure that you're going to be as comfortable as possible. We like to be that point of contact. And that's the difference today. Face-to-face relationship, whether you decide to go to State Farm, hey, you State Farm, thumbs up, great company. I'm not a State Farm agent, though. I don't know. But I would represent State Farm. I wouldn't be ashamed to have a State Farm policy. Nationwide typically is good. And some of the companies I represent, and I'm not really confident with good against people, but I can't say the name legally. But there's some good companies out there, but I think your company is only as good as the representation that you get as well. That all thing called communication. You want to dial a number, get a 1-800 number, wait on hold, talk to the machine, and not have a face-to-face relationship with your insurance agent, that's fine as well. But if you call us, you're going to get the education that you need. Now, segueing over to auto insurance, you can put them both together, get a discounted premium, and for your auto insurance, I want to say, if you have 1530 liability limits, y'all know what I'm talking about on your policy, it says 1530, everybody ever read their auto insurance policy? I'm going to explain to you very quickly. That means that if you get into an auto accident, say you slide on ice, you hit a kid, now the kid's limping for the rest of his life, what's the kid's lawyer going to do to you? Sue you. Now you are a homeowner. You have something on record that has value. That policy says they will only pay $15,000 for any one person that gets hurt, $30,000 for any one accident. If you're riding around with those low liability limits, then their attorney can put a lien or a judgment against your home. So you cannot sell it, you cannot will it. It becomes pretty much the person that you injured's house. okay, upon your death and or demise or until you pay the judgment off. So you must increase your auto insurance liability limits when you become a homeowner, or if you have, you know, a good 401k, if you got some money. Because attorneys will do they search your number, driver's license number, and the property search, and they will find out what you own. If you own property or anything of value, then they will go after you. Now today, if you have the minimum liability limits and you work at McDonald's, attorney's not going to really waste a lot of time trying to sue you because they're not going to get anything. Maybe discount coupon, buy one free, and you get the free one. That's it. So everybody understands. So your auto insurance policy, your insurance policy is actually a contract. We say policies, these are all contracts. These are legal documents. And we as consumers must be more diligent in reading and understanding these legal documents that we sign. We pay for them, but they do not all give us what we think we have, which is protection. Okay, any questions? Yes, sir.
Now can you get a discount if you have all three, life, home, and auto?
Yes. If you have all three, life, home, and auto, and you get life, not only do you get a discount if you go through me, you can get a debit. No, actually, now I'll tell everybody, because I know my time is about to be cut short, but I'll tell everybody, if you call my office and you book a Friday appointment, I do all my Friday appointments at Kennedy Gray Seafood Steakhouse. So Friday is the day that I eat, and anybody does an appointment with me, eat, down the guest, compliments me, the insurance doctor, and the food is excellent too. So if you want to do an appointment on a Friday, that's the only appointments I do is at the restaurant. We do a little food. If you love a good restaurant and you're interested in talking about disability or life insurance, which I highly recommend, okay, you can give me a call. I can either take the mobile office or my car or whatever. We'll meet at the home or a restaurant near you. Compliments. I like to do business over food. I'm old school. Yes, ma'am.
Is there a difference in the rates if you live in a single home and if you live in a row home?
Good question, kind of. A single home typically will cost more to rebuild. Because remember, when we ask for a quote, we want to build your house in the computer. It'll tell us how much it costs to build. Then they look at the zip code, like where the house is actually located, okay, and how far or close it is away to a fire station. That's basically what they're looking
So I'm
for.
thinking of this, like, something happened to you because we're connecting neighbors.
Okay, then what happens is in a scenario where if the neighbor's house catches on fire and you have home insurance, just no matter what, if you have a fire or something major happens, get out the house, safety first. As long as you have insurance, your policy will pay for your stuff. They will then use the law of subrogation, where they'll go after the next door neighbor and try to get their money back. Same thing as if you were in an auto accident, it was not your fault, and you had full coverage. They'll fix your car, okay? Or you can contact their insurance company directly and have them fix your car if you prove it's not your fault. And if you go through your own insurance company, they'll take care of you, and then if they get their money back, they give you back your deductible, okay? So we like to handle things. I like to do a whole lot of the claim stuff. How much time I got? Cut none, overtime. Okay, anytime you want to come. Okay, I'll take your last question. Go ahead.
Okay, again, when you say the liability, say if you have rent insurance, you need to also have owner's insurance, right? Do they modify it for you? You have to modify it.
Okay, the question is if you have renter's insurance and you want to switch it over to home insurance, what happens is all these are individual contracts, right? They're dated from one date to another date. Remember I talked about HO1, HO2, HO3. Every individual policy, a renter's policy is actually what they call HO4 policy, condominium policy, HO6 policy.